Hi Santa Barbara and Montecito. My name is Daniel Zia. I'm the founder and CEO of Zia Group here with eXp Realty on the Central Coast. And I'm here as part of our monthly commitment to be your local real estate economist of choice and to update you on what the real estate market has done. This is our September real estate market update, which means this is going to be reflective of our August 2021 statistics. What did the market do last month? And also my hope here today is to help you predict a little bit what the market may be doing in the coming weeks and months. So just to dive right in, first of all, the market feels like it's changing. And when I say it's changing is we're unsure what it's doing, but here's what I can guarantee to you. Because our team typically represents more buyers and sellers than any other agent or team in town throughout the year, every year, it means that we have some of the best active pulse on the market, meaning that we're part of the most active negotiations. And I can just tell you that even though I'm going to dig into the statistics with you today and talk to you as an economist, one of the things that we can do, being your on-the-ground resource with the best pulse on the market with all of these different negotiations is that the market just feels different. When we're bringing on a listing, we're expecting a certain number of offers, and compared to what we would get a few months ago, we're getting a fewer number of offers. We brought something on recently that we thought was actually priced really well with the recent comps. 3 months ago, I think it would have multiple offers, and we didn't get an offer at all. So there's something going on in the market, and I'm going to try to unpack that for you. But I just want to let you know that while you might hear a lot of agents talk about the market still being really strong, and it is, don't get me wrong, hear me loud and clear, the market is very strong. Wanted to put it in historical context. I think the agents and teams that are doing a large volume of business and really tracking the statistics are getting the initial impression that something is shifting, and it's shifting, I don't want to say it's shifting quickly, but it's definitely shifting, and the stats don't always reflect that until a couple months later, where kind of the general public and the general even group of agents really sees that something changed. So now it might be a short-term blip, it might be more of a sustained change, but it does feel like it's going to change, and I'm going to unpack that a little bit for you today. So I'm going to go over the statistics on our website. If you haven't been to our website and you're seeing this on social media, just go to zgroup.com. You can go up here in the top here, click into Learn, and go down to Housing Reports. We do this every month, and we share activity on the South Santa Barbara real estate market. We go into single-family homes. We go into condos, and then we talk about the luxury market of Hope Ranch and Montecito. And then we've also been going over year-to-date activity compared to last year-to-date activity, as sometimes that can be more accurate in predicting overall sustained moving trends versus just incomplete data sets by looking at just a month's data where something might have happened just that month, but it doesn't reflect an actual longer-term sustained trend in the market. So before I actually dive into statistics, I just want to share as far as the number of sales, the number of actual listings that sold, you can see right here on single-family homes, like it didn't change. There was actually the exact same number of homes and planned unit developments, PUDs, that sold in August as compared to August in 2020, which you'd think, oh, the market is equally as active, but really that sold activity is 30 to 45 days delayed because it reflects what happened 30 to 45 days ago as far as offer activity, negotiation activity. The real stat that I don't hear any of the agents talking about is we actually had 35% fewer homes in August go into escrow. That's 67 fewer homes that actually went into escrow. And there may be some reasons why. So let me just unpack that for you. There's a few reasons why I think the market may be slowing. One of it might be because we've seen such rapid appreciation, there are some buyers that are frankly just priced out of the market. What they hoped they could buy, they can no longer buy. When you have these massive price increases of 25, 35, 45, 50% increase over what some of these exact same properties sold just for a year or two ago, that is highly discouraging to a lot of buyers that have a fixed budget and they just no longer can afford the house that works for their family. So we're getting some of that. We're also, I think, seeing buyer fatigue. Buyer fatigue meaning some buyers have been looking for so long. They were waiting to time the market. They were hoping they were at the top and the market was going to go down. It didn't. Then the market skyrocketed right after COVID kind of started, and they tried to jump back in the market. And long story short, they still haven't bought anything. They've maybe placed 3, 4, 5, 6 offers, but they've been outbid because there have been 7 or 8 offers, or 10 or 11 offers, or 15 offers, or 22 offers on the property, and they've just been one of the buyers that have been kind of demoralized that they didn't get acceptance, and they're asking themselves why. At some point, buyers hit this fatigue state, and they often just tell their agent, hey, we just need to take a pause. We just need to take a pause. So there is that going on. If you fall into that category, I want to just share that it can be risky to allow your buyer fatigue to set in and to not move forward with your purchase if it makes sense in your long-term financial planning to buy a home in the near term. We don't know what the market's going to do, but there can be a risk sitting on the sidelines. If the market continues to go up, well, you may be even more priced out of the market, and you may go from buyer fatigue to go into that category of being priced out of the market. Or interest rates could go up. Maybe prices don't go up, but interest rates go up, and that can actually be even more devastating to most average buyers that are looking less about purchase price and more about monthly budget and what they can afford from a monthly amount, which is often tied pretty heavily to interest rates, because even a 1% increase in interest rates is like a 10% difference in real estate price. It can make a massive difference when you're looking at your monthly payment. So there's some other factors there, and then you're also losing the long-term advantages, tax advantages, where you get your mortgage interest tax write-off, you get your property tax write-off. There's a lot of people that are paying a lot more taxes than they could if they bought a house, and if you're not factoring that into your do you rent or do you buy scenario, factor that in. And then the fourth and final reason is I am such a big proponent of long-term property ownership. I'm not talking about playing the real estate market like playing the stock market or playing with crypto. I'm talking you buy a home or an investment property, you don't sell it, you hold it 30 years, you pay off your loan. Doesn't matter if the market goes up or goes down. It doesn't matter if you bought at the highest market of all time. I don't know anyone who bought a home 30 years ago that is regretting that decision. I know many people that talk about the homes that they sold or that they regret not buying because it's in a completely different financial position today. So enough said there. The last and third main reason why we might see some slower real estate market activity is, this is going to sound weird, agent fatigue. And when I say agent fatigue, I mean real estate agents are humans like the rest of us, right? Like everyone. I'm a real estate agent. We all get this fatigue, and with COVID, I think overall the general population has been experiencing more fatigue than maybe any time in modern human history, because we've had to pivot and pivot and pivot, and now we're homeschooling, and now we're not, and now we're wearing masks, and now we're doing this, and now we can't travel, and now we got to cancel our trip, now we got to reschedule a trip, whatever it is. It has been such an exhausting season because of that. Also, for those of you that are Zoomers, and we're doing a lot by Zoom now, it's actually Zoom. It can be more emotionally and physically taxing than in person because you have to overemphasize physical reactions and a bunch of other things. I won't go into that, but long story short, agents are exhausted. They've often had their most successful, their busiest last 18 months of their career, and they are exhausted. So why that affects the market is when agents are exhausted, they're not as active in the market. They're not as active showing their buyers property. They're not actively going to get listings. They're going on vacation. They're turning off their phone and they're resting and relaxing, and they're trying to recover. And when that happens, the market tends to see a slowdown of activity, not necessarily in pricing, but in activity. And I think that that's happened. Now, at Zia Group, we have a 21-member team with 8 all-star realtor partners supported by 13 incredible staff members. So we have a beautiful ability to take vacations and rest and refresh in a way that doesn't affect our client search or our sellers that want to sell. So we're not getting fatigued. We have a lifestyle that allows us to really, let's call it be long distance or marathon runners. So we're still there. If you need any help, we would be happy to interview for that position of your agent, and would love to go dive into that. So long intro, but let me just talk you through the stats. I think that context can often be more important than just what the stats are showing. So let me go ahead and dive into the stats. Here we are for single-family homes, and again, it says September, but this is reflective of your August data. We did have fewer homes come on the market in August. We talked about sold listings already. Here's one of the other reasons why we might have seen less sales activity. We had 43% fewer homes for sale. The total inventory was 43% smaller. So you have less homes for sale. The buyers may want to buy, but they just can't find the right home. That often means that you get less sales activity. Your average sales price, a little over $3 million for a home in the South Santa Barbara County. That's still a 39% increase over last August. So we're definitely seeing stronger sales prices than last August. But here's the thing. I don't know if we're seeing actually on the ground, case-by-case comparisons, stronger prices now than we saw 3 months ago maybe. The market 3 months ago felt stronger, and I can't really explain it more than that, but I think that we've actually seen a lot of the price appreciation that you're seeing here happened earlier in the year and not necessarily in the last 2 or 3 months, which is kind of interesting to think about. Days on market, this is how quick homes are selling. Still compared to last year, 17 days, average days on market is just incredible. It's a 61% decrease. So if you're a seller and you think you might miss out, you may have missed out on the market, you haven't missed out on the market. Give us a call. We'll bring it on the market. We'll probably have multiple offers for you after a week of full market penetration, and we're happy to give you that sales experience. Months of inventory, we talk about this every month. That's your absorption rate. You'll hear that term. That's if no new homes came on the market, at the pace at which homes are selling, how long would it take for every home on the market to sell? And that's 1.17 months of inventory. That's pretty much a historic low in our area. So again, the market is very, very strong. Hear me loud and clear. But for those of you that are trying to time the market or wondering what it's doing, we probably spend more time as a team tracking statistics than any other agent or team or brokerage in town that I know of. And that's why we're diving in so deep, is we are seeing some of those subtle shifts. And if you want to be aware of those, please keep tuning in monthly or give us a call for a private consultation. Condo market, I'm not going to go as in-depth today. You can log on our website and see this. Generally similar things as the single-family home market, except we did see a healthy amount of new listings come on in August, which is good. We need that because the number of condos for sale is also down 48%. So there's just not a lot of condos out there, and we've got a lot of buyers who wanted single-family homes, and now they're contenting themselves for condo because they've been priced out of the single-family home market. Really, that $1 million Goleta track home, 3.2, 1,300 square feet, that might be selling for 1.3, 1.35 today, something like that. So, so a lot of those buyers that are up into that $1 million range, they can't buy a single family home anymore, and so they're contenting themselves with condos. Still very quick on the market, less than 2-week average sales time, and we've got an average sales price of just over $950,000, which is an incremental increase over last August, but not a major increase. Now we're getting into some exciting things. Actually, before I go into Montecito Hope Ranch, I do want to share, if you're wondering what segments of the overall market are most active, the 3 fastest selling price ranges in August were between $1.1 million and $1.2 million, $1.7 million and $1.8 million, and $3 to $4 million. So you've got activity on the affordable range, on the mid-range, on the luxury range. All of those are moving quick. They all had an average sales time of a week or less. So very, very quick. And that's not to say that, hey, if you have a $1.3 million home versus a $1.1 to $1.2 million home, that it's going to sell, it's going to take substantially longer. But in August, that's just reflective of where were those bidding wars, where were the properties that flew off the shelf. Those were the 3 most active price ranges that had a good number of sales, so a good sample size that sold in a week or less. Now, diving into Montecito and Hope Ranch, that's our affluent area of South Santa Barbara County. We did see a slight decrease in new listings, and again, the same thing where we have a fewer number of homes for sale, and dramatically so. Part of that is we had 40 sold listings in Montecito, which is a 9% decrease, and a lot of that sales activity was actually over $5 million. We had 25+ million dollar sales, and we had 22 sales between $3 and $5 million. As you can see, that totals 42 sold listings. That's more than this 40, and that's just because some of those expensive sales were outside of this area of Montecito and Hope Ranch. You do have some other higher-end areas of Santa Barbara, and that's where you're seeing that difference. But that 3 to 5 million range and the $5+ million range are seeing incredible sales activity. The highest sale was actually 699 San Ysidro Road for $28 million in August, a great luxury sale. And on the condo side in Montecito, it was 75 Seaview for $2,795,000. So it gives you kind of a frame of reference of what's kind of the high ceiling at least last month. Average sales price, a little under $6.5 million, which is a 75% increase over last summer. And the luxury market has absolutely seen a massive jump. Part of that is we've just had such a large influx of luxury buyers in our area, and they're not as price sensitive as the affordable market, where they can pay that extra amount. They have the funds to do so, where the lower end buyers don't have to. So for those luxury buyers, it's more of, do they want to pay more rather than whether they can pay more. They're also looking at what other they can do. We've seen this a lot, where we've seen some properties sell for a premium, not necessarily because it's worth more, but it's about opportunity cost. These affluent buyers are looking at what else they want to spend their money on right now, what other investment vehicles are available for them, and they're sensing some more uncertainty in some other investment vehicles, and so they're wanting the certainty of something they can touch and feel, very different than crypto, but they can touch and feel real estate, and they want some tangibility to their asset, and in a lot of ways their portfolio have done really, really well the last year and a half, and so they're looking at that extra profit that they've received, and so even though the real estate has jumped up, when you compare to what they've made in their portfolio, it doesn't feel like it's that much more expensive because they have more money to spend because their portfolio has done so well. So just some context there. Still, homes and estates in Montecito and Hope Ranch are selling very quickly, just over 3 weeks. Less than 2 months supply of inventory, which is just astronomically low for those luxury affluent areas. Lastly, I want to just go into year-to-date sales activity. Again, this can be more accurate when you really hone in on what the market's done as a trend versus just a month-to-month blip where you might have weird data or a price range. So, a higher price range just happened to pop in one month and not the next month. So the average sold price went up 54% year-to-date compared to the last year at the same period of time. And the median sold price is the one that I always focus more on. I think that's a truer statistic in general of what the market has done from an appreciation standpoint, meaning the home that was worth, $2 million, a year ago is probably worth 2.6 today. That's what I'm looking at, or 262, right, with a 31% increase. Now, condos, this is always interesting. We get this question a lot. Do condos and single-family homes appreciate or depreciate at the same basic pace? Generally speaking, over the time they do. In the last year and a half, that has not held true. Here's a great example. The average sales price of single-family home, 54%. Average sales price increase of a condo, 20%. So houses have outpaced condos by 34% on the average sales price and 15% on the median sales price. So if you're a single-family homeowner, you did much better on your real estate investment than if you're a condo owner. But if you're a condo owner, you're still probably not complaining. You got a nice price appreciation bump. So last thing I'll say is overall the market has seen its best year, I think, ever as far as the total volume of sales. We've had over 1,000 sales. I think it's 1,015 year to date at the end of August. To put that in context, I look back 20 years. I couldn't find a single year in the last 20 that had more sales activity than that year to date. And when you compare it to 08 and 09, which both had in the 500 range of sales activity, you have about twice as much sales activity compared to those years when the market was really struggling and starting to go down after the market peak. So again, it's been a great year. It's still an incredible market. I think there's opportunity both as a buyer and as a seller. I know that sounds contradictory. I am still investing personally in real estate. I bought a property last year. I'm going to buy hopefully another property this year. But my reason why is we've got great interest rates and I believe in long-term property ownership. And I want to continue to buy property, whether it's an up market or a down market, and I want to take advantage of those interest rates so I can leverage and build that net worth over time. As a seller, if you sell now, you're going to get the historically highest sales price you ever could have in the history of real estate, in the history of your property. So it's still a phenomenal time to sell from that perspective. So I know that was a little longer than usual, but I hope that context is helpful. Thank you so much for tuning in. We would love to have a confidential consultation with you and really learn more about your real estate goals, tell you what the market might be doing as it applies to your situation, and help be an advisor for you that's neutral without any pressure, and just give you the data and some more interpretation customized to your situation, so you can have a strategic plan, whether that means doing something in the near term with a purchase or a sale, or just putting the financial pieces in place so you can do that that purchase, or maybe for tax situation or estate purposes, do that sale at the most advantageous time for you in the coming months or years. So until next time, Santa Barbara and Montecito, thanks for tuning in. Again, this is Daniel Zia. Please tune in next month, and we'll fill you in on what the market's done in the last 30 days when it comes time. Take care.